Rishi, once you take out the currency issues in particular, some China issues as well, it seemed like a solid quarter, right? So to what do you attribute this 4.5% pop we're seeing this morning?
Yeah, thank you so much for having me. I would characterize this as very much being a better than feared quarter, right? I think the FX stuff was known. Microsoft actually updated, intra-quarter, and we can all track how the euro and pound and yen move. But the bigger thing is cloud showed some pretty nice resilience. Azure decelerated underlying about 4 points, which isn't that big a deal. That's a typical volatility and significantly less than what Google Cloud decelled. Google Cloud decelled 8 points last night. So I think that was seen very positively. And then the guidance for next year, right? I think there were worries. Would they be able to maintain that outlook of double-digit revenue and double-digit profitability growth in spite of FX, in spite of macro concerns? And they absolutely did that and gave some pretty strong Azure guidance to boot. So I think this move up in the stock is absolutely justified.
And what does it say that they're even able to give, comfortable giving that kind of guidance? It wasn't too long ago that the sorts of economic headwinds we're facing now had companies saying, maybe we don't want to guide at all. But things have stabilized. Is that the message?
I think there's two things that make it different with Microsoft, right? Number one is, they're going after core mission critical workloads at the enterprise, right? And they're having ongoing conversations with customers about consumption patterns, about pricing and all that stuff. So that gives them a level of comfort to be able to forecast. And the other is it's purely a subscription model right now, right? If we think about Microsoft in the last real recession, it was a very, very different company. Subscription companies are significantly more predictable than the old model. So I think it's a combination of those two that gives Microsoft the confidence to guide the way they did last night.
Do you think the commentary acts as a bit of a relief to overall macro concerns about Europe and what might happen regarding lead cycles? I mean, what do we do with McDermott's comments in the wake of what Microsoft said?
Yeah, look, I think they need to be taken together, right? Microsoft has talked about some longer sales cycles. They talked about some consumption weakness at SMB. These are all caveats, right? And I think, with ServiceNow reports tonight, we'll see what they talk about. But in my mind, it is still saying the macro picture is maybe slightly deteriorating, but it's not nearly as bad as people thought it would be. So I think that's kind of the sum of what Microsoft said and what Bill McDermott had said last week.
So, Rishi, let's talk about where Microsoft is going. It's making a big bet on gaming right now, accounts for a relatively small amount of its business. However, it's trying to close that nearly $70 billion deal for Activision Blizzard, yet overall gaming revenue in the quarter declined some 7% year over year.
Yeah, look, in my mind, right, there's a couple factors driving the gaming downward tick, right? You have tough comps from COVID and post-COVID. You have supply chain issues in China from the lockdowns, meaning they can't manufacture enough Xboxes to meet demand. You also have the delay of some AAA game titles. But really, look, gaming longer term is a huge opportunity for them, especially with Xbox Game Pass. And if you listen to Satya's commentary on the call yesterday, that was one of the big bright spots out of gaming is Game Pass, right, is marching down that vision towards becoming the quote Netflix of gaming. And I think once Activision closes, and I do expect it to close, I don't expect too much antitrust pushback. I think the value prop for that becomes only stronger. So I think gaming will continue to become a big point of emphasis.